Economists and seasoned investors are each pointing out that the market is approaching a precarious point of change. As the bear market transitions into bull, many forecast a recessionary phase to emerge between the two states of the market. From an investing standpoint, this calls for a steady yet agile approach, and one that is capable of foreseeing opportunity amid the growing uncertainty of the upcoming months. Within these conditions, some names outshine others, given rock-solid fundamentals and unique positioning in the market, which make them capable of capturing value, even during a potential recession. Those that take this strategic route when building up their portfolio for January 2023, are likely to soar through the winds of change, and benefit when others flounder. In this video, we bring forward a list of 5 ideal stocks to buy during January 2023, to stand prepared against the expected market transition to be seen. These stocks not only deliver high-quality value to shareholders, but are also primed for imminent takeoff. The first stock we present on our list is the oil and gas titan, Exxon Mobil Corporation, which trades with the ticker XOM. Exxon Mobil's dominating position in the market makes it perhaps one of the best-positioned players to capture the benefits of the disruptions of the oil refinery market. Since the embargo was leveled against Russia in early December, Exxon's margin expectations for the coming months have spectacularly skyrocketed. Moreover, the European Union embargo on Russian diesel and gasoline is likely to result in a further price hike in the fossil fuel market. In 2021, the EU has been purchasing 1.2 million barrels of refined fuel products from Russia on a daily basis. This coming to a halt is likely to take oil prices to soar new heights, hence paving the way for XOM to maintain its record-breaking performance trend. In fact, recent XOM results show that its margins for refined products have already been climbing far above the 10-year average range. The shifting trend clearly allows the company to see enhanced margins in this domain, in addition to that of natural gas and chemicals, which it has already been benefiting through. Due to these conditions, Exxon Mobil revised its earnings guidance 21 times during the year, all on an upward basis, anticipating stellar top and bottom line growth. It projects to deliver $279 billion in annual revenue for 2022, up significantly from the 2021 figure of $179 billion. For 2023, the company has set its revenue guidance at a whopping $426 billion. XOM is on an aggressive growth trajectory in the top and bottom lines. For these opportunistic conditions, the stock is one of the best picks for January 2023. The second stock on our list is the Chinese smart EV manufacturer, NIO Inc, which trades by the ticker NIO. The company faced some of the worst headwinds this past year, given China's zero-COVID policy, and all the supply chain disruptions caused as a consequence. The result was the stock plummeting from its 2021 high of over $62 to its present price of $11. However, with a strategic shift currently in progress, and plans to accelerate production, NIO reflects a terrific entry point for investors. For one, NIO is enjoying a dominant position in a market where electric vehicles continue to see climbing demand. November 2022 reflected record number of deliveries amounting to almost 14,200. This translates to a 30% rise from November in 2021. Similarly, in third quarter, NIO reported a revenue figure of $1.83 billion, which was more than $50 million higher than the third quarter of 2021. In addition to climbing demand, another core factor behind this impressive top-line growth is NIO's focus on expanding its product line and offering a range of EVs that cater to a wider pool of economic segments. This diversity, which favors different income groups, is a key differentiator to the company, delivering it an excellent competitive advantage. Additionally, NIO has its sights set in the future, with aims to conquer the European market. This is evident by its recent entry into the most important EV market in Europe, which is Germany. The company has established its AI and autonomous driving research facility in Berlin, vastly enhancing its future potential. This would further act as a launch point to enter other key European zones, such as France and Italy. NIO has all the markings of a great investment, and is therefore a screaming buy for January 2023. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving, or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. For number 3 on our list, we turn to take a look at the Communicate Asset REIT, American Tower Corporation, which holds the ticker AMT. American Tower is not just any ordinary REIT, but with its market capitalization of $100 billion, is one of the largest in the world. It owns over 223,000 communication sites across 25 countries, and has been showing booming performance growth over the last decade. From 2011 to 2021, its adjusted funds from operations have shown an impressive rise, amounting to a compound annual growth rate of over 15.3%. Despite its giant size, the management is optimistic that this will remain in the double digits through 2027. Similarly, quarterly dividend across the prior decade has also taken off spectacularly, from 21 cents to $1.56 per share. One reason why AMT is confident to maintain impressive growth has been its focus on Africa, and the ripe opportunities it provides. The continent is expected to see a middle-class boom in the coming years, which will coincide with explosive growth in monthly data usage per subscriber. Similarly, Africa provides the best return on investment to AMT, given the low construction and maintenance costs. In recent years, American Tower has been pushing for an aggressive expansion in Africa, including the setting up of infrastructure in Uganda, Kenya, South Africa, and Burkina Faso, bringing up exposure there to 11%. The management expects Africa to drive forward its overall growth with economic and demographic trends. AMT presents a golden opportunity as a large and established player, which is aiming to push on its enormous growth momentum. The 4th stock on our list is the American semiconductor company, Skyworks Solutions Inc, which trades by SWKS. Many investors have been turning to the semiconductor industry, given its impressive performance this year, where it even outpaced the S&P 500. While this is true, Skyworks Solutions Inc has been beating the index for at least the last 10 years. For the fiscal year 2022, SWKS saw its annual revenue climb from $5.1 to $5.5 billion, whereas EPS also rose from $10.50 to $11.24 a share. This growth on both the top and bottom lines is impressive considering the supply chain disruptions seen this year. This strong performance is due to the high-quality products the company offers, which holds wide applicability ranging from aerospace, medical technology, and cellular infrastructure, to gaming and smartphones. This puts Skyworks at the forefront of the wireless tech revolution. Its clients include Amazon, Microsoft, Google, General Electric and many others. However, its most lucrative client, which represents over 50% of its revenue, is Apple Incorporated. This over-reliance on a single customer has been a major cause of concern for investors, considering Apple had cut out critical suppliers by vertical integration. However, Skyworks has been expanding its market and product portfolio over the years. Since 2016, its number of total clients has tripled to over 6,000. Moreover, its positioning in the dynamic realm of the Internet of Things significantly expands its future growth potential. According to McKinsey, this market could value over $12 trillion by 2025. As a result, Skyworks could see considerable demand for its products, especially coinciding with the rising trend of EVs. SWKS is a great name to invest in, given the tremendous potential it holds, despite the risks inherent to it. The stock is one of the hottest deals in the market right now. This final stock on our list is the North American energy infrastructure company, Enbridge Inc., also referred to as ENB. As a company, Enbridge has a lot going for it, which makes it so desirable from an investment standpoint. For one, the energy infrastructure industry is a critical one that ensures the smooth functioning of economies and societies at large, and ENB is one of the most essential players in the North American region. In terms of volume, Enbridge operates the continent's largest natural gas utility business, and is the third largest by customer count. Its network has grown over the decades to now boast over 52,000 miles of gas transporting pipelines. Similarly, its crude transportation pipeline is one of the longest in the world, standing at almost 18,000 miles. This dominant position it holds is unlikely to be overthrown, given the insurmountable barriers to entry this critical industry faces, thus making Enbridge essentially irreplaceable. In 2021, ENB saw its annual revenue rise by 17%, delivering over $37 billion during the year. This is likely to see a dramatic surge as the company recognizes rate escalation in utility charges, expands its customer base, and activates new assets. Above all, Enbridge has been increasing its dividend payments for 27 consecutive years, while boasting a handsome yield of 6.9%. The company has all the markets of a strong income generator, and is a perfect fit for anyone seeking a rock-solid investment portfolio. For January 2023, that's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ensure your portfolio is well suited for long-term growth. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.